Hello, traders. It's Monday morning here in Chicago. It's 8:02 a.m. Chicago time on the 12th of October, 2020. Thanks for joining me on episode number 1856. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk on all the way. The indices are flying high. The Nasdaq's back up near 12,000. The S&P just hit 3,500 on a rally that has been persistent throughout the evening. This morning, Republican senators came out and said they are going to push through whatever stimulus package the president wants. And knowing that the Democrats want a stimulus, or the Democrats in the House want a stimulus package to be approved, it sounds like the market's going to get what it wants, which is also what the Fed had already priced in per their comments last week. So overall, tech stocks are pushing 205 points, 205.5 points, trading at 11,932 currently, 1.76% up. The Nasdaq is the leader. The Euro Stoxx 50 up 26 points, and the DAX is up 89 points, or 0.68%. The S&P is up 23 and a quarter points, another gap. Now remember, Friday we had a gap, and on Wednesday I believe we had a gap, or Thursday we had a gap up as well, a tiny one that was left behind. The Dow's up 54 points. The laggard today is crude. Crude is trading at 39.97, still battling that key $40 figure, down 63 cents or 1.55%. A reminder that today the bond markets and the money market related transactions are not occurring. Banks are closed today. And in addition to that, we do have earnings kicking in starting tomorrow. Tomorrow we get Citibank, BlackRock, Delta Airlines, Johnson and Johnson. Those are the key players. On Wednesday, we do get U.S. Bank Corp, Bank of America. We get so we are just starting out in our earnings season for Q3. So pay attention there as to what is going on. Again, it's a bank holiday today. Most of the releases overnight. What's going on with this calendar here? Most of the releases overnight came out of Europe, and nothing affecting the U.S. markets. So we do have some key numbers out of China this evening at 11 p.m. Eastern. Balance of trades, exports, and imports. So that's where we stand currently. There's nothing on the calendar stated. And so let's dig right into what we had expected versus what we got on Friday in our review segment. Friday, this looks kind of messy here. I know that I drew all over the place, but overall on Friday, the expectation was a pullback and test of 52, 34.52 right here. This will be 34.52. And then the expectation is the market's likely to push into 68, expected 68 to present a wall. So a push down to 52 and a squeeze up to 68. That's what the key scenario is. The secondary is an attempt at 68, falls through, and then comes back into balance. That did not take place. Anticipated that at least they would try to fill the gap on Friday, since we have several gaps underneath. Did not do that. And so Friday, where did it end up? Here's what happened on Friday. This is a 4-tick Renko chart. We opened up at 56 and a quarter. We basically just had an open auction out of range with a sell skew, pushes right into 49.50. Remember, I was looking for 52 right here, at least to test to 52. Got to 49.50, and then we start to get our first impulse up, gets tangled into the 68, and finally pushes to 74. And then we consolidate in the 68 quite a bit. There was quite a bit of volume that took place in the 68. 68's a thick zone for me because there's a fair amount of confluence there from the past, from when we were here at the beginning of September. And it just turned into a consolidation on Friday. Nothing very exciting. Friday presented, I was thinking of doing a segment here for the Trader Bite, but it's a little bit too much. I was going to show how the order flow looked to set up this long. It was really a textbook setup for the long here if you use order flow, but it's too long for me to cover here. We finished strong on Friday. We only break one side of the IB. We have a normal variation day, and we ended up basically ending the auction with a week high 74 earlier, 74 on the close. That's a double TPO top there. The expectation is it'll likely continue to squeeze higher. What this shows on Friday is that the auction was interrupted by the close of the market. So we anticipate that the market's likely to continue to push higher, but also because we are hitting that area. This is really important that we check out the composite here today. Let's extend this out. So as we talked about last week, all of last week, we put in that high at 1250, we put in the low at 31.98, and then we breached the high, the one-time framing down on the weekly. We breached it by pushing higher, and then we finished the week before last with a higher high, higher low on the weekly, accepting value back up against the 40, the 40 since the all-time high, and a 60 since this balance. And so, all in all, what we had is one-time framing ending and beginning with last week, and then last week put in a higher low and continued to discover higher with gaps in here. We do have a gap in there and in there. And what I said is once it gets through this last high volume node here at 3403, 3404, this area here is likely to be a quick auction as it pushes through. You can see it's a very thin area. Even with what happened last week, filling in a little bit, it's still a pretty thin area until you get to 3,500, really specifically 3,492. But we're at 3,500 now, and we have very little left to push the all-time high. The all-time high on the December contract, backward adjusted for premiums, is 35.76.75. Make sure that this is what your chart shows. If it does not show 34.76.75 on the day session, this is RTH only. If it doesn't show that, that means your prices are not being adjusted for the premium, which means you have a gap, a non-existent gap on the rollover day, which throws off all of your historical data. So anyway, so this is what we're looking at. We're looking at a market that is just continuing higher. The one-time framing up continues, it looks like, through the weekly, and now the 33.42.75, 33.43 becomes important because it stands for the weekly. This is the weekly one-time framing level down here, which is against that large high volume node at 33.40. So we're going to keep a very close eye on any drop towards 33.40. Right now, buyers are winning. Sellers had a very, very hard time. We had a lot of battles last week. If you look at the intraday charts, there were a lot of battles back and forth. as buyers and sellers really matched wits and effort, and the buyers came out ahead. The profile from last week, you can see it's very, very jagged, heavy price discovery, and we've left behind the point of control for this week at 94.33, 94.25, and we've walked away from it. This steam engine is likely to continue through this 3,500. I do expect some response today, a little bit of response back today. We generally do test back down on a gap on the weekly, but it didn't do so last time. We'll see what happens. Here's what the overnight session looked like. I put this trend line up. Let me turn off these zigzags just to kind of quiet things down a little bit. I looked at the low of Friday, and when I was doing my homework last night, I put this trend line just to see as the market was leaning against it, and you could see that it pretty much held the trend line, multiple tests, and it continues higher. The trend is long, as you can clearly see, with a very active price discovery process through the night with 237,000 contracts. Now, this doesn't seem like, oh, well, 237,000 contracts. Remember, banks are closed today, and the volume was pretty high. We anticipate that since the bond markets are going to be closed, that a lot less volume would be taking place. So under normal circumstances, I think the volume would probably be in the 300,000 range. We're up against the century figure. The overnight high is at 3,500, and we're not letting go. We're not letting go of that level. It looks like I missed the 3,500 stock zone. I'll throw that up here in a minute. We're not letting go. We're not moving away from these levels very rapidly. So we're forming what is a weak high against the 3,500, and the 3,500 is going to be in play today, probably for most of the day. Expecting a spurt on the open and then expecting it to quiet down again because of the bank holiday. Not expecting a lot of volume. This is Indigenous Peoples Day, formerly known as Columbus Day. Here in the United States, it's a holiday, and so I'm not anticipating that we would move very strongly today or directionally today. We'll see how it goes. That combined with the fact that it is a Monday tells me that that we're probably not getting anywhere, and that's correct. My family in Canada is celebrating Thanksgiving today as well. So that's where we stand in terms of the order flow, just looking in general at what is transpiring in the order flow. When we're, you know, we are pretty active, relatively active. You can see the buy side, big dots all over the place from the buy side. Big dots on the buy side from the buyers here, as the delta is positive. The dots represent delta, the overall delta, and we're pushing through some collision areas here. But looking above and below, you can see we're fairly clear. 3,500 has had some liquidity, but I'm not seeing it I'm not seeing it playing a long-term role here. There was some liquidity ahead of it, but you would expect a long or a lot of resting orders at the 3,500 and for us to collide in there. There's some selling activity going on right now. You can see it's pretty much a fight. I expect this to rotate back down. I'm looking for it to pull back a little bit on the open, but there's not much to clue us in on the order flow currently. This picture is going to change slightly as we open, and we'll see how that goes. But all in all, pretty bullish market, and the delta's positive. Price has been positive. Delta's been moving with price, and so we have a fairly healthy push higher. Okay. So that's where we stand. What are we expecting for today? Let's set up the chart here. Here's what we've got. So as we push against this high up here with a weak high, I'm looking for it to pull back. I'm looking for responsive selling. The overnight inventory, since we actually closed right here, the overnight inventory is mostly long. Okay, probably somewhere around 92% or something like that long. When I checked earlier, I'm expecting it to be responsive to pull back around 34.90, consolidate here for a little bit, and then make a run for the 3500. I'm looking for us to poke the 3500 and then consolidate into the close and hold this area. Most likely we'll rotate back down to that high volume node at 92, which is where I'm expecting it to pull back and test. So this here, 90 to 92 area below, and then above, looking for 3506. Pretty tight range. So that's what we're looking for today. The secondary scenario really is the opposite, but the same levels. Open immediately, come into a buy, test through the 3500, push into the 06, 05, impulse down, come back, consolidate at the open, and squeeze down to 90.92, and then finish sideways as well. Really not expecting too much. I'm not prepared. Not prepared to for breakouts today, although the performance has been stellar overnight. But for the last 2.5 years, the market has really made its strides overnight, and then we've ended up in the day session here in the United States or in America on this side of the globe. We ended up with the consolidation. So I'm not seeing it any different today. We'll see what happens. Again, the area below 90.92. If it breaks the 90.92, we may see some acceleration down to 82, which brings us down here, and then a potential gap close of 74. This is 74 and 82, although not really seeing it, happening, but we'll see. I'm not. My goal is not to get too excited about the price action today, and not to be anticipating too much that there will be a lot of movement. So I'll leave you with that. Good luck today, and I'll catch you tomorrow morning where we return to normal. Take care.